Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's go back to the euro currency again. What do we see on the daily chart? Well, yesterday our assumption that probably market could show some pullback to the downside due to the patterns that have formed yesterday on the market. The intraday charts in fact panned out. So we see that market has shown significant bearish engulfing on the daily time frame right at the point of monthly pivot resistance 1. And that is also the 133.80 area, 133.50 is the point of completion of our ABCD pattern. Not that pattern, but the pattern that was before this recent one. This is the CD leg of this pattern. As you recall, remember that it hasn't quite reached the target just for the 40 pips when this retracement has started, but later it has returned right back and has hit the target of that ABCD. Well, it looks like that it appears that that was enough to start some pullback to the downside. Now we see that market not at overbought, so when the trended oscillator shows the normal condition of the market. By the way, since that was the level of overbought the market has hit with this candle, we know that typically market gravitates to the 0 point, the break-even point between oversold and overbought levels. And probably particularly some room here you can see on the trended oscillator. It's precisely the room till this our support area when the trended oscillator will hit the 0 point. Well, maybe that will be indeed so, but this is not the major point. Our task for now is starting to watch for bullish reversal patterns on the intraday chart, since we are approaching to our first support area that I hope that we will see the real upward reversal from that area and continuation to the upside. At least this price action will be natural for bullish environment that market now shows. Ultimately, as we said yesterday, our invalidation point is that low. It's 129.97, 130 approximately. Particularly from that point, market has pushed out from lower body of weekly long-term parallel bearish channel. And if market will taking out this low, for instance with the downward move and returns right back, well, that will be the total, I suppose, destruction of bullish sentiment, of bullish context on the market right now. But until this will happen, well, we have in fact bullish market, bullish price action, and that is our tradable low. Tradable means that we could trade against this low. So use it as the beacon, as break-even point, as the mark, separation between the bullish scenario, bullish context, and bearish context. So, as I said, all our attention to that level is 132.48, 132.20 area on the intraday charts, where market could form reversal pattern. If it will happen within the current trading session or tomorrow maybe, we probably will try to stick with this pattern and make the attempt to enter on the long side of the market. So what we see on the 4-hour time frame? Well, guys, on the 4-hour time frame we see our former double repo sell pattern, but probably you've got that was really you could say cunning and tricky price action on yesterday's yesterday's trading session, because when the market has given us the confirmation of the double repo by this candle, you can see, as we said, wait when the market will erase the butterfly. To erase the butterfly on the hourly time frame, market has needed to taken out of that low and erase it. That has happened with this candle, but market has erased butterfly before it has shown the move to the upside. Well, theoretically, and to be absolutely honest, with this candle, market has shown the double repo failure pattern, but this close was just for about 1-2 pips higher than the level of invalidation, and after that market has returned right back to the downside, and we could say the double repo pattern in fact has worked, and it is working now. The target of this pattern is 132.20, 50% support of the thrust of the double repo. So you can see the target of the double repo stands very close to our area of support on the daily. That also includes the weekly pivot point. Now I would like to say a couple of words about how to deal with this, with the double repos patterns, especially when you're afraid, you're scaring of such sort of the tricky action. That in fact we have the triple repo. It's 1, 2, 3. So John Napoli tells that such sort of the action usually appears on the bond market, because bond market shows a lot of different retracements before reversal, and it has the tendency to show not the double repo but triple repo, or even more times repo before reversal. But on the currency market, that's, as you can see, also could happen. And what we could do with this? Well, I find only two ways how to deal with it. Personally, I apply both of them depending on the scale. So if I trade on the lower time frame system, 4-hour time frame, hourly time frame, usually I place the stop right above the high of the double repo, or after the confirmation, of course, or very close to the top. Not right above the top, because if market will break it to the upside after the double repo confirmation, this will lead to the stop triggering, and market will accelerate here. So better place stop somewhere some pips lower than the previous stop. Or the second approach is if we trade on the higher time frames, where the stop is much more valuable, because this is the question of the money management. Because if you can't place stop in this area on the higher time frames, it's better to wait the pullback after the confirmation. Very often when the market shows the confirmation of the double repo pattern, it shows the retracement back. Sometimes it holds by 3x3. It means that all candles of the retracement stands below the 3x3, but sometimes it's not. It could happen that market will show the pullback to the upside, but double repo will not fail, or will be the case as we see currently, and then returns right back now. So it's better to wait the potential pullback to the upside and enter, for instance, on the retracement with the stop above the high, or wait when the market will continue move to the downside after retracement, to be sure that it's not the double repo failure. So personally, I do not see any other solutions of that situation. Maybe you will find something else, something more reasonable and wiser approach to how to deal with the potential, if you could say, double repo, double failure. So because we have the failure of the double repo, but failure of the failure by this action. Well, anyway, now market shows that double repo is working, and we are approaching to this area of support. So our task now is to drop our time frame to the lower scales, to the hourly time frame, 30-minute chart, and watch for potential patterns or reversal patterns here. So we will take a look current view on the hourly time frame. What do we see? That is some sort of the triangle consolidation. The market has broken to the downside. Take a look how harmonic retracements hold right here. So you can see all pullbacks to the upside with the equal distance, almost equal distance, and the same slope. That's just amazing. Well, looking for a current price action, we can't exclude that here could be, for instance, the butterfly buy, 618 butterfly buy, because here we see multiple stop grabbers that's forming with the MACD predictor indicator. It means that this low probably will be taken out by the price action. Why I think that it will be the 1618 rather than 127. If you will take a look at this pattern, A, B, C. Sorry, not this one, this most recent. A, B, C top. You'll see that 1618 extension of that ABCD pattern stands precisely at the same areas. 1618 extension of the butterfly, that is 132.30, and that level appears inside of that one, of the target of the double repo, and our support is 132.40 on the daily time frame. So that's absolutely reasonable on the market. We'll find the support somewhere between these areas, because we should treat levels not as the precise number, but as the zone around the level. Maybe here will be formed some other pattern, for instance head and shoulders, reverse head and shoulders or something, but currently I do not see anything else besides of this butterfly that is possible, could appear. Well, we'll see. But the fact is, we should be very careful and pay attention to the current situation, current levels, since market should turn to the building of some reversal patterns in this area. So that's our trading plan for the current trading session. Well, let's see how it will turn.